Hey, good morning, everybody. Today is Tuesday, February 27, almost end of the month, 2024. February 20, yes, and 7:27 a.m. Eastern Time. So let's review what I wrote in the market swap and compare what we have in the book, what is the structure of the pre-market. At the close, the volatility skew printed, a bearish smirk, where, the main region is supposed to be 5065, 5070, right? And higher implied volatility out of the money. Puts means the pattern is to go down, more premium in the put contracts than call contracts, and consequently suggests market to be ready today, right? So regarding the delta flow also yesterday was totally bearish. Okay, totally bearish. We closed below 5,075. You have a lot of negative delta in 5,075. Consequently, suggests a rejection at 5,075. Okay. Per gamma design left yesterday. We review what we have right now. Okay. We start to flip gamma to negative territory at 5060, right? And they add a defense at 5050, 5050. That's, the gamma structure for today left yesterday in the book. Also, the option book suggests something very close from the gamma, right? So, for option book, 56 tends to be viable in 5050, worst case scenario that match with the gamma. Okay, so dealers yesterday, basically they sold. They weren't willing to buy at the level since the GX dropped to 44%, but the GX jump almost like $1 billion, so they remove volatility from the market. Also, when you see like lower DX, they also remove liquidity. So, but this setup left yesterday suggests a red day today. Okay, so let's review what we have right now, especially the gamma. Let me get the spreadsheet over here. Look how gamma is different right now. So basically, we are in a negative gamma territory, and they had defense at 5030, right? That's what we saw here according to the delta flow. Okay, match with the delta flow that left yesterday. It's a defense at 5030. But instead of flip negative gamma at 5060, now we are in a negative gamma. And we flip positive at 5085, 5085. The delta flow is still almost the same. See, the delta flow didn't change too much. So the spike in delta before 5070 was really low and we expect a rejection. Now if you break 57, market tends to flip to a positive gamma, means squeeze. And the inflection point now is 59. Okay, it's 59. Note that the 5100 is still the major gamma region, still the region that markets looking to break, right? To bring us around 5200, 5300 and etc. But the delta flow is still bearish. Okay, basically we don't have gamma. See, it's a negative gamma, but I consider no gamma. It's like minus 7.09. Basically, it's no gamma. Everything can happen, and consequently negative delta 2. Okay. So when we see squeezes, when we are in a negative gamma territory, right? So now focus in 57, squeeze is supposed to be start above 57. Also, that was the region that we expect a rejection last night. Okay, but now we could see a squeeze. Okay, so let's close the gamma and close the delta, and let's watch the most important thing, that is the volatility skew. Look how the volatility skew change a lot. Now the pattern is, let me refresh my screen. Now the pattern is sell out of the money puts to buy out of the money calls, because now the setup is to going higher, not lower. That also match, with the delta design and the gamma design, because we are in a negative gamma. So is where squeeze happens, right? And 57 suggests us, the point that we start to see a squeeze. Of course, it's a pre-market, but it's totally different than yesterday. If you guys go back to the market wrap that I sent on Friday, I was looking for two options. One bottom supposed to be around 5,065 or 5,045 for 5,030. Remember? So yesterday we print 5,069, very close from 65. We don't need to go exactly to the strike, but very close is good enough, to certify the structure. Okay. Today we have, a very important economic agenda. Anyway, hope you guys, already understand the difference between what they left yesterday, that could be a trap, right? Because yesterday the implied volatility to puts was so high. So if they know the economic, data that's supposed to be released today, they always know. Okay, they always know. So that's also, they build a trap to sell, premium, to buy, to use the money to finance, their long in gamma, right? So could you be a trap yesterday? Could you be a trap yesterday? Because the design changed too much. It's not like a little change. And remember, we are in a transition. When we start to do like a gamma transition, that's, the most difficult book to read, right? That's the most difficult book to read. That's also when they set up a trap. But anyway, we were looking for 65. Of course, the worst case scenario is the best place to buy, right? That's the best place to buy. But if dealers decide to bring, to the first gamma and delta support and then melt markets up, anyway, they have like a billion of robust computers to calculate premium. And so, what do you have today in the economic data? Hedgebook has like an influence in the XY and consequently in yields. We have the house prices index. We have the HPI, the S&P HPI composite that also could move the market. And especially over here, you have the Richmond manufacturing shipments, Richmond service index, central bank consumer confidence. We have a Fed speaker today, okay, and we have the 7 years note action. Also, the Atlanta Fed GDP now. So the agenda is kind of not too much calm. It's not too much calm. That's the agenda that could you price recession or no recession, raise rates and not raise rates, and consequently affect direct in the risky assets. Okay. Anyway, let's check. Remember, that's a pre-market. That's a pre-market. The setup left yesterday was better. The setup now in pre-market is bullish. Could you be like also a trap right now? Remember, machines know how to calculate premium better than I. First of all, Bitcoin, we expecting at least a backtest at 55k. Now it's 57 because they form a pivot over here. I told you guys on Saturday, guys, we form a pivot, so looks like that Bitcoin is looking to backtest 55k, and now we are in a process to break the same resistance that's this dashed line here. Let me put the level that is located at 56k 998.35. This one, okay, that's the first level of resistance, and then we have the major resistance at 58,800. Remember that I posted you guys before the cup and handle. Let me put in the monthly graph. I guess monthly graph will be better to watch. So remember the perfect cup and handle that's being formed, right? So the top of the cup and handle is a weekly pivot. This is monthly, okay? We have we have a pivot here that's located at 55k, very close from all-time highs. So what I'm expecting, exactly what we saw in Mara, is back in test here, and could you go and you know, a Bitcoin could you back down? We could you see a flush up to 53k or up to 52,500, or worst case scenario 50,700. Okay, so I'm looking for a possibility to go back test 55,000, you know, to certify the formation of this cup and handle, and then a flush, worst case scenario 5,784, but a flush up to 56,000 where we are right now, or at 52,944, is more reasonable to backtest at least 52,944 to see a flush at 52,944 and then go back up, break, and consequently all-time highs. Okay, that's a very bullish, you know, pattern. If I'm correct, that's a speculation, but so far that's the formation. Regarding Mara, Mara is already 32. Okay, but look, Mara, you know, the correct ways to do it like this. I placed in the closed group before. See, a perfect cup and handle. So we went down up to the EMA 20 at 22. That was this candle, right? At EMA 20, the blue line. So the monthly support was 23.49. Remember that, like last week I said, guys, we will not be able to buy more Mara below 23 because we close above the EMA 8. But in another day, they decided to bring Bitcoin to backtest 5,700. Consequently, we went back down and backtest 2360 or something, right? And jump back up, right? So these, you know, certify that figure that we call hands, cup and handle. That's very bullish figure. The target of this cup and handle is 48.43. Just to let you guys know. We have a resistance right now that was 2022 pivot. We have a resistance right now at 33.68. Since we already break the old supply zone that started at 28.95 and went back up to 29.19. So break at 33.68, you know, the next will be 39.49, 42.87, and the final destination, that's the cup and handle target at 48.43. Okay, just to guys understand all the levels. So 28.95 became the support. Okay, became the support. Before was the 3-month graph resistance was a pivot over here. Okay, you guys gotcha? Anyway, Bitcoin at 57,000, so we expected that. Now, as I said before, we could go back up to 65,000 or 68,800. That's the one is the top of the couple handle, and 58,800 is the major resistance. Okay, remember the DXY I post several times to you guys. That's something that we need to look for, because if it's going down, the market entering in a risk on mode, not a risk off. Remember the hedge and shoulder. So where we saw a rejection is exactly at 104,699. I sent this to you guys in market structure document, how the morning calls. I highlighted this several times. That because of that I also became bullish, very bullish, because downtrend in DXY, possibility to break the neck at 100.78. DXY could go back below 90, go back test 89. Consequently, risk on mode. Consequently, a melt up in cryptocurrency. I have been telling you guys, a lot of people just focus in commodities, focus in assets that will not outperform cryptocurrency, right? And consequently, I give you guys a call to buy EBIT at 22, and I give you guys a call to buy Mara at $8, at $16. Remember? The another, tool, let me use the word tool that I'm looking for, also to buy TLT, is a head and shoulder formation tool in 10 years yield. We have a shoulder resisting an old gap at 4.365. Note as dollar, we back test again and went back down. Now it's up. I mean, it didn't open yet, but I'm expecting now the TNX, the 10 years yield, being traded between maximum 5.365, and why not break down the neck at 3.785. If you break down the neck at 3.785, guys, we will enter in a recession. TNX tend to go back to 0.5. Okay, tend to go back at 0.5. Means bonds also will skyrocket. Okay. So I guess I already gave you an overview about everything. So so far the design suggests a melt up, but you have economic agenda that could act direct in risky assets and safe havens. 57 bullish delta flow. Just to review, 57 bullish delta flow, inflection point to a squeeze. Inflection point to a squeeze. Okay, volatility squeal, SPX. Just you guys memorize that. Volatility skew. Bullish smirk, not a bearish smirk anymore, right? So what's the pattern? Sell out of the money puts to buy out of the money calls, because the higher implied volatility in out of the money calls means that the premium is located in the calls, not in the puts anymore. I was expecting, also because the book, weakness yesterday, weakness today, and consequently today to see a volatility skew like this for Thursday and Friday. Basically, I was looking for the same pattern that we saw last week, but now looks like they want to change and they want to bring strength right now. Okay, could you be changed? Yes, could you be changed? I told you guys, I follow the flow. I don't go against the flow. As yesterday, people, I will buy, I will buy, I will buy. I said, no, so far I'm not wanting to buy because the flow, the structure is not bullish, right? And consequently, what you guys saw at the close, a dump, not a pump. But today, at the pre-market, looks like the setup is to a pump, a squeeze. Not a squeeze, but a buyers jumping. We are not in a process to squeeze because we are not in a negative gamma. Also, note that the put call ratio is lower. Let me see if you open over here. So we are not in a process that everybody, is a squeeze, a squeeze, a squeeze. So the put call ratio is really low. It's really low. So this is not a squeeze. A lot of bears already left. Of course, we have some assets like Mara that have a big short, but the short on Mara been going lower. Before it was 30% of the free flow, now it's 10%. Of course, other assets like Nvidia, people's keeping trying to short because people's keeping trying to be millionaires from one day to another. Consequently, markets going up. The Magnificent Seven, that's the 7 acts that people trying to find a top and short and short and short and short. Consequently, they bring market up. They collect out those premiums. Dealers sell high, buy lower. But now the pattern, is not like a squeeze in the market in general because the put call ratio is really slow. Even the CPI that's 1.4 now is 1.1, right? 1.1 is not dealers hedging themselves because dealers are long gamma, they hedge themselves selling futures, right? I also hope you guys understand that. But anyway, the pattern between last night at the close and pre-market is totally different.